The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. You got half of the Money Masters. I'm Steve Rhodes. Tom will be here for the last half of the show. And right now you've got the Dow up 40 points, S&P's up 5, Composite up 9, small caps up 3, the New York Stock Exchange up 0.4%, up 28 points, the NDX up 12 points. Our call number is 877-927-6640. Would love to hear from you. You got King Dollar up 4 ticks, gold trading off 60 cents right now at 15.91, silver off 43 cents, light sweet crude up 41 cents out at 91.89. Price of the pumps is starting to get a little bit nice. You got the DAX over in Germany. They're up 46 points right now, trading out at 63.18. We've also got the FTSE out. They're up 30 points. Nikkei was up 22 last night. Shanghai up 4. And let's go take a look at the. Let's go take a look around the world. Let's go see, because I didn't do that during the first hour that much. Let's take a look at the DAX. Now, the DAX out here, folks, the DAX is actually, it's on its way down. It's making an A to B equals CD down. It's running into a resistance area, support area, I should say. And that support area is this uptrend channel that the DAX has been in, coming all the way back into the September 2011 time frame. And if you just simply take a look, if you were to just simply draw, if you were just simply to go ahead and draw a channel line, you would use the bottom of the body on September the 12th. That happens to run right into the body on the lower end of September 26th. You then run into the body on November 25th, the day after Thanksgiving. And now what you are seeing it do, you're seeing it run into the body today. And so it's trying to stay, it's doing everything it can to stay inside that channel. But when you really take a look at the move on this C to D leg, it says that the DAX wants to get down into the 59.50 area, more likely 57.40-ish as a target range. It is below its October 28th swing point, so that's important to take a look at. Let's go take a look at what the UK is doing, what they're doing out there. Give me a second here to pull up the chart there on the FTSE, and what the you can see that now that this is a daily chart that we're looking at. So it's trading out right now at 5,300. And just a little bit of change. It has made a 1 to 1.618, a 1 to 1.272, A to B equals CD down, but it has further to slide. It is going to go all the way down and test the November 25th swing point. So folks, it's absolutely a heads up as to where our markets are going. It's just simply a matter of time. And so you've got the FTSE headed at least to 51.51. That'll test the November 25th area, but much more likely is it's going all the way back into the lows, quite frankly, of August of 2011. It'll first make its way down into that October 4th area of 2011, and then it'll probably go test the lows from August 9th, 2011. That's on the FTSE. If we go take a look at on the currency side, we looked at the euro this morning. Again, the euro trading into this very powerful planetary index date. There was a 2-day configuration on August the 24th and 25th of 2010. On the weekly chart, you're trading inside that area, which is a high of 1.27784 and a low of 1.25661. I believe it's 661. I can't really. Maybe it's 861. If we go take a look at the pound, let's see if the pound is getting pounded or if it's bouncing a bit here. The pound right here, Great British Pound daily chart, it's getting pounded. It's getting pounded this morning. It's trading near its session lows, trading out at 1.5803. The actual session low, 1.5778. That broke a huge trend. That trend going all the way back into the January time frame. It broke through that like sliced Kerrygold butter, and it did that, folks, on May the 16th. So now what you've got going on here is you've got an A to B equals CD down looks like forming here on the Great British Pound. Your A point would be April 30th, the high out there at 1.63. The low put in on Friday, and it looks like the retracement was done intraday here on the 21st. That would say the pound wants to get down to 152.7. Makes a lot of sense because that takes you all the way back to where that trend began. That would have been January 13th, 2007. That's going to put some strength in old King Dollar. Let's go take a look at the Japanese yen just to finish out the currencies out there. The Japanese yen here making a 0.618 retracement on Friday. That target was 79.13. But, folks, it's the A to B equals CD pattern that you should be paying attention to here. That'll take the yen into the 77.80-ish area, where it also completes a 0.786 retracement. And so that is where the yen is headed to. Looks like we might have another A to B equals CD within that C to D leg. Let's take a look at that and see if that gives us some additional conviction. It does, because the 1 to 1.272 on that takes you to 77.56. So that whole 77 and change area is absolutely where the yen is headed. And what is that going to do? What that's going to do, folks, that is going to take, if we go back over around the world, let's go take a look at the Nikkei and see what the Nikkei did last night. It was up about 20 points, I believe, and Nikkei was up 22 points. But let's go see. The Nikkei is on its way down to a lower price as well, and that is a beautiful thing. So the Nikkei finishing out at 1 to 1.272 A to B equals CD down. I didn't realize it did that. That's interesting. So it actually, the Nikkei got to the target area before the yen did, and so that would suggest that the Nikkei and Sony, specifically, because I've been looking at the Sony stock, that there is lower price still coming at us in the Nikkei. The Nikkei wants to trade all the way down to November 25th. So another heads up, folks, when we start taking a look at the markets around the world. Let's go to our first caller. Let's go to Rick in British Columbia. Rick, thanks for calling. Thanks for holding.
Sure.
How you doing today?
Not too bad.
That's good. How was your weekend?
Oh, really good, thanks. We don't have much of a sense of humor out here in the West Coast. When I made my call in, the guy that answered the phone, I said CF, and he went, "Oh, cornflakes."
Ah, that's great. I love it. I
told him a little too early for that for me.
I love it. Hey, now what time in the morning do you get up out there? Yeah, because
it varies. If there's, obviously we trade by volumes, but a lot of times at 5 o'clock, I wake up just before 5.
Okay.
Because some of the bigger news, stocks to watch, da-da-da-da-da.
Yeah.
8 o'clock your time. I do watch CNBC, not that I listen to too many of their...
No, hey, look, I have it on as background music sometimes.
Yeah. And another place, if any of your tagger and taggeresses, is Yahoo Space in Play. And what that is, it gives you all the stocks news of the morning.
Oh, okay. What's it called?
It's Yahoo Space.
Yeah.
Then in Space Play. Go do that on Google.
Okay.
Google.
Okay.
And then it just gives you all the different. Anything that happens between 8 and 9 o'clock your time.
Yeah.
Won't come out. It comes out every hour.
Okay. Okay.
Where I'm sure there's other websites that are like live.
Yes.
But I'm looking at CF Industries.
Okay.
And I'm looking at the market too, and I think we're going to get a nice counter trend bounce here.
I think we are too.
But not yet.
I agree.
And I'm looking at, I was wondering, these potash companies, boy, if you can hit them suckers, they really go. You know what I mean? And CF and Mosaic, and CF looks like there's a gap just under 150. And
right.
But I think this thing can rally as high as 180. But just when, I don't know.
Well, it had some volume come off the top, CF did on May the 4th. Now, what about potash? You didn't say potash, so you don't like that? I haven't looked at that chart here for a couple of days.
I do that too.
Because potash, it's testing, in the case of potash,
that one's a good one too.
Because it's testing its lows right now. Back when I say its lows, the swing point's going back into December. It looks like it's doing that on lighter volume.
It is. You're right. And that one's, and you're right. Potash, same thing. You could get a rally to $42, $43 on that sucker.
Yeah.
But it might might not be finished yet. Let me see here.
Who would you say? Because I know you trade these a lot. Who is the real leader out there in that business? Is it?
Well, we have a 10-team football league here in Canada, right?
Okay.
And we're allowed. We have to play so many Canadian players.
Yes.
And then the rest are imports, and it's a bigger field.
Okay.
Like our end zones are 20 yards deep. Yours are only 10.
Yes.
And but anyway, we have what's called the Saskatchewan Roughriders.
Okay.
And they're really kind of like the Green Bay Packers. Not necessarily from a winning record, but from a heart and soul, smaller community.
Okay, sure.
Yeah, but anyway, and it's called Mosaic Field.
Okay. Oh, okay.
So they put their money where their mouth is, and I think Mosaic and Potash. So sometimes I get leery of companies that call themselves after the name, if you know what I'm talking about.
Okay. Yeah.
You know what I mean? It almost sounds too good to be true, but I could be wrong. I mean, we just got to look at the chart, but. So yes, pot's really good too. I mean,
because and Mosaic, they're already trading into October 4th. Pretty interesting, as you go through chart after chart after chart, or maybe even around the world, and everything coming back, either in November 25th and October 4th already.
Well, Mosaic's really quite clean. You see that 45 weekly low. I think if you put it on a year or a quarterly, you technically would have volume down there. On a weekly, it kind of gets the lows. So it looks like 45 has got huge support on Mosaic. I mean, you could buy it 45 and put a stop underneath it, right, kind of thing?
Well, I tell you, the actually October low is the one with the volume. Let me just make sure. Let me just refresh the screen here, because you trade inside that swing point. That actually says on Mosaic 23.96 is game.
Where are we looking? Quite a few years back, or what?
Yeah, going to October 2008.
Wow.
Yeah, October 2008. Just out of curiosity, I'm going to draw the ABCD pattern just to see if it's not really much of a retracement here yet.
Yeah, you're right.
But it does. Yeah, actually, an ABC down would take it right down there.
Wow, that's huge.
That's kind of the danger things on some of these stock charts. Actually, I looked at a number of stock charts over the weekend that are really good looking still. Still, that's the whole key. And the air hasn't come out of the balloon. Some of them are pulling back into some breakout areas nicely, and they're getting to stages where you'd want to take a nibble. But with the general market conditions, you can't.
Well, I'm glad you brought that up. I never did go that far back.
Yeah,
but that's pretty scary.
It is. I mean, there's just a number of most of the stock charts I take a look at have some scary stuff. Even this morning during the 9 to 10 o'clock shows, just taking a look at Home Depot and Lowe's out there. And those stock charts do not look good if you go back to the longer term time frame. In fact, if you go to the monthly charts, they look downright scary.
Yeah. No, you're exactly right.
Yeah, absolutely.
Thanks a lot.
You bet. Take care, Rick. 877-927-6648. We'll be right back, folks. You got the Dow up 68 points right now. S&P's up 9.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains.
Go to TFNN.com today, click Investment Newsletters, and get Ken Shree's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. It's that time of year again, and the Great Panther Silver Summer Silver Giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver Giveaway the whole month of June at TFNN.com.
Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, I just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we waited at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. You got the Dow up 60, S&P's up 8, and the composite up 20. Apple trading up a whopping $11 right now. That's the chart that I have on my screen. And, if you were listening to our last caller, Rick from British Columbia, there is going to be a bounce that takes place at some point in time. I can't tell you whether that is today or not. What you need to be able to do is to look for some clues out there. Well, one of your clues could also come from Apple. Why? Because if you take a look at Apple to the downside and take a look at the A to B equals C to E down that it completed that really on Thursday and Friday. The price projection on that was $5.29 and a little bit of change. It actually got down to $5.30 on Thursday, got down to a low of $5.22 on Friday. Now, the B point on this, folks, you want to take a look at, the B point as an ABCD is completed. And the B point on this is going to be April the 24th with 38 million shares. Now, you can see the red line that goes across the bottom of my screen here if you're watching this on Tiger TV. You can see that that shows what the volume is. So now you're able to take a look at the volume as you've passed the B point on the way down here. Now, and you also want to take a look at the retracement that Apple did off of the top. So the retracement that it did from the highs going back to April 10th when it traded up to 644, even Steven, all the way down to the lows, the B point from April the 24th. But you'll see it did a normal 0.618 retracement. That is just absolutely normal. Nothing wrong with a stock, an equity, a chart, anything that you look at that does a 0.618 retracement. That is absolutely normal. You should expect that. That should be your expectation. So, meets our expectation. You've now got below the B point on lighter volume today. Right now you've got Apple trading up 542. Is the price point and some change. You're an hour into trading. It's done a little over 5 million shares. That says Apple could be doing in the range of 30 million shares or so And again, when it came through that B point, 38 million shares. So take a look at Apple. If they're, let's just say a bounce were to start, one of the things that you're going to want to take a look at on Apple is how it handles that B point, how it handles April the 24th. That low is 555 even. Does it get up to 555 and change, close back below it on lighter volume? Does it get up above it on lighter volume, more volume? You want to take a look at Apple as one of those stock charts because the stock, the chart itself is not falling apart whatsoever. In fact, though the reality is it could be setting up a large A to B equals C to up. Why do I say that? Well, good question. Let's just simply go take a look at the retracement that Apple has done off of November 25th, because that's about as good as a spot to take a look at. Apple was on a tear from November 25th when it was at a low of 363 all the way up into the high that it made at 644. What you will see, all that it also has done is a 0.382 retracement. So you make an A to B equals CD down. You don't take out the B point with volume. You do a 0.382 retracement. That is, folks, if you only do that kind of retracement, it actually says that Apple still has a lot of energy, still has a lot of potential to the upside. So one of the first places that you're going to want to pay attention to, in my opinion, in the markets is what goes on with the lead dog, that lead dog being Apple. The other lead dog is King Dollar. So you absolutely have to go out and take a look at the King. We pull up the dollar index here, and the dollar index on Friday made a bearish engulfing candle. You want to see a close today below 81.42. You're traded 81.38 right now. You get a close below that. That says the dollar index wants to pull back. Where could the dollar index pull back to? Well, can pull back to anywhere that it wants to. But if you just simply take a look at normal retracements, you'd go from the A to the D point out there. Again, 0.618 would be the normal spot that anything could pull back to. That would take the King back to $79.50, $80 or so. What would that do? You'd be running into this trend line. This has been a strong trend line coming all the way back to August 2011. So you'd want to get a confirmation today. And that would be the close on King Dollar. You'd be also taking a look at Apple, just trying to put a couple things here together for you. And at least that's what I'm looking at as two of the items out there just to gauge this. Now, folks, we could get one heck of a nice rally, bounce instead of rally, though, is what I would use, folks. And that's all that it is, because all of the warning signs are out there that you have much, much further lower prices absolutely coming at you. If you didn't catch the 9 o'clock show, we were just taking a look at Home Depot, and we were taking a look at Lowe's, because Lowe's was out with earnings and reports this morning. Lowe's is the number 4 guy on the totem pole on the way down, trading down 9%. I'll go ahead and put that chart back up on the screen here real quickly as we go into a break. I'm going to try to put it up. And what you want to do, folks, sometimes you just need to go take a look at the monthly chart. Lowe's gapping down to the D point, the first D point. Lowe's has much, much further lower prices coming at you. It is making a bear of a bearish engulfing candle, let alone a three-river evening star, folks. We'll be right back.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us, folks. So we have the Dow right now up 84. NASDAQ is up 31. You get the S&P's up 12. And,
Look who I found wandering around the offices,
That's a beautiful thing. What's happening? So, of course, everything was Facebook last week.
Yeah. And I still was Facebook. I couldn't believe all the stuff they still had on CNBC and the commercials that they're running and talking about Facebook. You know, aren't we over Facebook?
They're taking everyone to the cleaners, man.
Oh, my goodness.
Big time, too. Big time.
Yeah.
And what's going to be interesting here, folks, is to see, will that be the high period? We'll see how that shakes down. Because if you remember, there's not a lot. Well, there's plenty of high-profile IPOs that have come out that hit a high and never hit it again.
Right.
And Blackstone would be one of the biggest ones.
Yeah.
I think Blackstone came out, folks, I think at 36. I think it's trading at 19 or something.
Yeah.
And it's never, that was it. They took all their money that day.
Did, yeah.
It's almost the same thing happened
Well, it was
here.
actually cool. I think I heard a comment of yours. I don't know if maybe it was you and David talking on Friday or what have you.
Yeah.
But you were talking about, so why all of a sudden did BlackRock decide to go public?
Yes, exactly.
Right.
I
mean,
to get the retail money. Right. Yeah, big time. And now that was a huge cash out.
Yeah.
Extraordinary cash out.
Yeah.
And
this is an extraordinary cash out.
Oh, huge.
Huh?
No, absolutely huge. Absolutely huge. Now, the thing is that this is where the pressure is going to come in, too, folks, is that within 6 months, you have 90% of the lockouts are going to come off. So that's nothing, man. 6 months is nothing.
Yeah.
That's, anyone holding it, it's like if you're thinking of buying it, just wait 6 months, folks. Wait till the lockup comes up, and I'm sure you'll get a very nice price. And not that, Facebook is going to be a powerhouse, period. So this is just...
Yeah, they're not going away or anything overnight. This is just an issue with regard to the, the valuation and the stock trades. It has nothing to do with
107 times... what they make. Give me a break, man.
Yeah.
You know what I mean? That's you're paying $107 for $1 of earnings. And that doesn't mean that they'll give you the $1 of earnings, by the way.
That's right.
They can go spend the $1 of earnings.
That's right.
Pretty amazing.
Yeah.
So you had your master trader.
Yeah, it was absolutely fantastic.
Yeah. Hey, what a great day for it, man.
Oh.
Boom, down with conviction. Huge conviction on Friday, folks. Okay, if you expansion of volume, you had it all.
Yeah. No, absolutely.
Today's a day of rest.
It is. And
building cars.
It's the rest for the king.
King Dollar.
Yeah.
Well, King Dollar, what's amazing, too, is that, King Dollar's been moving up, has the conviction, but it's only been a small move in the context of, to me, it looks like it wants to go to 89. And the more that it backs off, like it's backing off with lighter volume, all that's doing is building up strength.
Yeah.
And, it's a monster.
It is. Well, and it's the euro is, what's kind of interesting is this morning I was taking a look at the Japanese yen.
Okay.
So here's the U.S. dollar Japanese yen chart, which made a 0.618 retracement. But, the full ABCD pattern doesn't really complete until it gets in that $77 range.
Yes.
And then I had thrown up on the screen here, folks, you can always watch us on Tiger TV. This is the Nikkei. The Nikkei's already made that retracement. It already made that 0.786 retracement.
Yeah.
Which is what we were actually looking for.
Yes.
But now when I take a look at the yen chart, it says that this thing wants to come back to November 25th.
Yeah.
Which then all of a sudden, correlates to what really our markets are at least.
Oh, yeah.
That November 25th is certainly game on.
Yeah. And what you had, folks, is that the first leg, you had the expansion of volume, and you had all of the above. That's every indice flat across the board.
Yeah.
And, you get a bounce, and you can expect bounces along the way, but I expect, the next 4 months, is going to be pretty intense markets. What's going to be wild is watching people scramble, well, really institutions scramble. What they're saying, folks, and they've been saying forever, is that they have no exposure to Greece. So let me tell you something. When this thing comes down, you're going to find out, even our own banks, what type of exposure they have to Greece. And it's going to be, one of these same old things that, no, we thought that we had that settled. It was okay. Well, oh, geez, we're going to lose $2 billion now. Oh, really? There's another $2 billion.
Well, yeah. No, I think they're well beyond the $2 billion now.
Oh, Jamie Dimon. Oh, yeah.
Right?
Listen, you know what's amazing? Even so this morning, they're out of their mind, folks. I mean, totally out of their mind.
And they're big on this Facebook deal, aren't they?
They're part of the underwriting syndicate, But the broker deal is not going to lose money on the Facebook deal. The public lost all the money.
Oh, yeah. That's for sure.
And the institutions that bought it. Do you know what I mean? But the Dimon says this morning, so Dimon, folks, was speaking, he was a keynote speaker at one of the other banks. So what he says this morning, he's well, we're not going to, tell you the ups and downs of this thing, but we hope that we'll get out of it by the end of the year.
Yeah.
That, folks, statement
that's pretty amazing, isn't it?
Let me tell you something. How would you like to be in a trade? What's he going to get on his knees next and start praying? Oh, yeah. I'm telling you. That is too long of a period.
Yeah.
That's 6 months, right? Yeah, that's 6 months.
Yeah.
Folks, in the markets, 6 days can destroy a position that could be that huge. Never mind, 6 months.
No, that's, So when all the details come out, it'll be pretty amazing.
It's going to be unbelievable. It's going to be unbelievable. And right now, see what's going on right now, folks. No one, well, J.P. Morgan knows, but the street, other traders don't know the specific number of contracts that they sold.
Yeah.
What you do know is that even since it came out, that product has gone against them dramatically even more.
Right.
So it's going to be like, okay, how do they get out of it? And let me tell you something, folks. They're going to get out of it, and they're going to push it out to the public. And what's going to happen, more than likely, is that they'll make another fund. So they'll make another fund. They'll put a bunch of garbage in this fund.
Yeah.
And then they're going to push the fund out as some kind of structure.
Yeah.
Yeah, I'm sure they're working on it right now. And it's just amazing. It really is.
So bonds took off to the moon.
Yeah.
Last
They
week.
broke with conviction.
Yeah.
160, man. Bonds are going to 160.
Yeah,
Listen, it's
gonna
insane.
pull back a bit.
Yeah, well, see, it's confirming now. That's what you'd want it to do. Well, for a 160 move, folks, you have the first move, 135 to 148, okay?
Yeah.
Bang! Huge conviction up to the top, blows out all the swing points, does it with conviction. Now you back off to the top of those swing points.
Yeah.
Whoa, baby, get out of the way.
Yeah.
And it just lines up with the market period. I mean, that's the bottom line.
Yeah. So if we take a look at a bounce, if we just simply pull up the SPYs here.
Yes.
So you got when you take a look at, I'm just going to clean this chart up here. Okay. So you got March 6th sticking out here.
Right.
Which has high volume,
yes.
201.
Right.
Would you say that that's where you'd be looking for it to bounce to?
Yeah, it could. Yeah, which would be beautiful if it did. It seems that the market, because we stayed up at the highs for so long,
yeah,
and it kept going back up, and failing. When that does happen, this market just may not bounce until it gets down to 1150.
Right.
Right. And what that is, folks, is that the bulls every single time say, oh, okay, hold on, we're going to do the bounce. The bears are saying, okay, I want to get in. And unless you're in the trade, that the move has already started. And we're going to know a lot today, because if this market can't hold price today,
yes,
and just a flat market,
yes,
oh, baby, the rest of the week's going to be nasty.
Absolutely.
And
so if we just simply take, go through one scenario where the March 6th area holds as the bounce, okay,
yes,
and just take a look at it on the SPYs.
Right.
What it is, that's the red line across my chart here screen. What that is, folks, is it basically is saying that Friday becomes the new swing point.
Right.
Okay, so you got May 18th. The low out there is 129.55.
Yep.
And it did have accelerated volume, okay, on the way down there.
Right.
But if all it does is a bounce up into March 6th, that is only a 0.382 retracement.
Imagine that.
And what that says is that you're going to do 1 to 1.272 or 1 to 1.618, A to B equals CD.
Yep.
Takes you to November 25th.
Right.
Takes you right there. So, even doing a bounce like that.
It's amazing, isn't it?
Now normally you wouldn't take a look at trying to come in on only a 0.382 bounce. You're just going to take a look at reward to risk.
That's right.
But I think that, once, you got to also take a look at the mere fact that, we're back inside the next leg of the bear market.
Yes.
So you got to start. You got to start just doing some. What you have to do is you have to trade it and realize that you may have to take a couple of shots to get in on the short side.
Right.
And you just simply use the right money management piece of it. And even though you might normally come in here, I think that's how you just have to attack. That's how I will be attacking it.
Yeah. No, absolutely.
Yeah.
And it's a nice setup, because what we haven't got, folks, and this is just absolutely amazing.
We haven't got any fear.
No fear.
It's kind of been amazing.
Isn't that unbelievable?
Yeah.
It really is. And folks, that is not how.
I was really surprised.
Even short-term bottoms in a bull market, okay? That isn't how it works. You got to get some fear in here.
Yeah, there was a little bit of fear that came in on the 15th. There was a downtick of 1508.
Yes.
So one downtick of 1508.
Right.
What was amazing to me over the weekend was when I did put up the, because, there was conviction on Friday.
Oh, yeah.
It was pushing down.
Right.
And when I actually took a look at the tick index over the weekend, I was like, that wasn't what I expected to see.
I know.
I was like, that really means that the bottom, has not been put in.
Yeah. And that's, folks, even a short-term bottom. To get even short-term bottoms, you're going to get a couple ticks. You're going to get the trend coming in. It doesn't have to explode, but you're going to get it coming in.
Yeah.
Let's go to Rick in Longwood, Florida. Hey, Rick, what's going on?
Oh, pretty good. Thanks for taking my call, Masters.
How you doing?
Thanks for calling. Thanks for holding, man.
Doing pretty good. Yeah, I got in GE, and while I was on hold, anyway, you guys kind of answered the question by showing me where the SPYs might go.
Okay.
I went long a couple days ago, so I'm in a good position, a little bit ahead on GE, and because it had relative strength, or seemed to have some relative strength on a yearly chart,
Yeah.
Anyway, so I'll be looking for, I guess you already answered my question. I'll be looking for the SPYs, the SPX, to get up up towards that swing point you were talking about.
Yeah, I think that. Well, the thing is, remember, it may not get up there.
Oh no, whatever it does, it does.
Yeah.
At least we have a temporary target.
There's a target out there. Now, in GE, what are you shooting for?
I'm not shooting anything for particular. I'm just looking for it to bounce.
Yeah.
So however far, yeah, exactly. Because the other things, some candles, this, that, and the other. In fact, this morning I think he's making a harami. No, it's something else. The spy's in harami. That's what it is.
Yeah.
So however far it goes, I got my stop in, and I'm going to tighten it up, guys.
Okay, good. All right. Hey, thanks for calling, Rick.
Have a great one, man. Have a safe one.
Thanks.
Yeah. Now, the weak link out there, Qs.
Yes. Yeah. Huge.
Absolutely.
They're in nowhere's land, folks. Because you got down there with conviction. There's nothing to stop these things down to 59. At 59, 58, you're going to have some juice. Now, the correlation will be today, and with the correlation specifically I mean is this, folks, is that you get the bounce out here. If that bounce is on lighter volume, we'll find out whether it's going to be or not. But that is just saying you're building the B2C of an ABC structure on the way down.
Yeah.
And
the markets are all really set up the same way. They're all,
they're in harmony. Big time.
0.382 bounce. Now, the U.S. market's stronger than the markets overseas.
Right. Oh, yeah. Big time.
That's because of your king.
Yeah, king dollar.
Where are you going to put the money?
They're going to succumb to selling.
Yes.
It's just the way it is.
Yeah, absolutely. So, any other news over the weekend? The G8 summit, what came out of that? Anything?
Dog ate everything there.
Yeah.
No, the next thing that I think that is on the agenda here, folks, it's going to be still all about the euro, and it's going to be about Greece, and they're massaging the deal right now,
Yeah.
But that's going to be the kicker. That will be quite a kicker, folks, because it cracks me up. They keep claiming that nothing's going to happen. It's like they're out of their minds.
Yeah.
Okay, because it's not because they're gone. It's going to be because what do the people in Spain? Do they run the banks? Do the people in Italy run the banks?
The pound has had a heck of a sell-off today. Got all the way up to 159, trading out right now 158. It's off its session lows, but it's selling off.
Yeah.
The pound is in trouble. What's kind of interesting is the gold charts.
Yeah.
So now you were, because a lot of all the filings had been out.
Right.
Okay, so you were taking a look at folks that actually had been selling gold. If I put up the daily chart.
Yes.
And what did you find there? What did you find with regard to who was?
What you have is this. Paulson has absolutely got smoked. He didn't sell anything.
Yeah.
So those positions went underwater. I mean, they were underwater, but they went underwater another 20-30%.
Yeah.
Huge problem for him. What you also had is you had a couple other funds come in, and they come in pretty heavily, and they're down another 20-25%.
Yeah.
It seems right now, and this is pretty cool, that so gold folks, broke the lows from last week, had some conviction on the break. So that wants to go back and test them. The XAU, the HUI, has continued low with volume dramatically contracting.
Okay.
So that indice does want to go lower, both of them. But that is setting up.
Yeah.
Because what happens, folks, is that you can actually go another 20% lower, and I suspect it's going to. But that drying up means it's going to go, boom, there's going to be a big trade there. Steve Rhodes, Tom O'Brien, you stay right there, folks. We'll come right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
David White's newsletter,
At Tiger
The Technology
you
Insider.
more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now,
Yeah.
did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
See, what we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Rand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling out here with us. And Dow right now is up $1.03. You got the Nasdaq up 38. S&Ps are up 14, and you get the bounces on. There's no doubt about it. And it's on with lighter volume.
Yes.
Apple, look at Apple and Priceline. They're both up $17, right?
Yeah. Let's check out Priceline. I haven't looked at that Priceline here. Now, that is a stock that has gotten hammered.
Yes, no doubt. There's
let's see what kind of volume is in there today.
Yes, they're going up in light volume. So you come off 68 down to 648, and you can bounce. This could be a heck of a bounce, though. That's right. Yeah. Setting up a larger structure on the way down.
Yeah, absolutely. Setting up a nice ABC down.
Yeah.
Now, what held it was this breakout area.
Right.
So Priceline, was held by this breakout area.
Isn't that wild? I know.
Yeah. And there's a number of stocks out there that I looked at that are, even if you take a look at eBay.
Yes.
Okay, so now what's interesting on eBay out here, we know that thing broke out pretty nice, but that thing is, Friday got inside the gap there.
Look, and it's going to fill.
So it's going to.
Isn't that amazing?
Yeah.
And eBay, folks, they've gone from 36 to 42, stayed up there almost about a week and a half, and now it's starting to fill the gap again. And it'll get filled.
Exactly.
So they...
and how some of the bulk shippers got crushed, man.
Did you see EXM?
Oh, yeah,
I did.
I said, okay, it's off of our radar now.
See, that's where patience pays, folks.
Absolutely.
That's not even close, man. That's intense. I saw that. I know.
Yeah.
I know.
Now, some others look okay out there. Actually, the dry ships looks okay.
Yeah,
take a look
you wait and watch. No. Look at dry ships come all the way back. You know what's amazing about that?
Which is great.
Think about how long it hung up there.
Oh, I know.
And
That's right.
People call and, bottom line, no, you got to let it all come back. And look at it, it comes all the way back.
Yeah. And
percentage-wise, that's like it'll come back, 40% or something?
Yeah, more than that probably, because you were at $4. You're down at $2.20.
Unbelievable.
Yeah, so that's a huge pullback. But that's why you do need that patience.
Yes.
That's why you got to have that discipline, which is really what we were dealing with on Friday at the Master Trader course.
Right.
It's really a very disciplined approach to trading in buying and selling the D point.
Totally.
And what was great was we just went example after example. Didn't matter whether it was a live chart or something that I had.
Right.
That I just taken something from to have as part of the presentation.
Oh, exactly.
So we could watch it happening. Right there.
Right there and then.
Right there in front of us. And so it's really and when we had taken trades on the dry shippers, it was on the EXM, and it was because the risk reward on dry ships
was there.
It wasn't there.
That's
it wasn't there on dry ships, but it was there on EXM.
Right.
And what was nice was we got the bounce on EXM. Dry ships never really got much of a bounce.
Right.
So that was kind of cool. But yeah, I took a look at EXM over the weekend. I was like, oh my goodness.
I know. And what's happening today? Like if we pull up Home Depot, Lowe's.
Yeah.
These housing stocks, folks. They're doing the retracement, and what you're going to have here, and these have been the strongest stocks. The setup. What you're going to see here is that they're going to bring those babies back, and it'll be quite a retracement. And that sector will absolutely give you a larger heads up about what's going on. Because if that sector is pulling back, all the sectors are going to pull back. And it makes sense, though. Stocks went from 27 to 52. You can pull back to 25 in a heartbeat.
Yeah, Home Depot's
35.
Depot's had an absolutely fantastic run.
Right.
But would like to see it pull back on some light volume throughout this.
Yes. No. The first leg is pretty intense. No, there's no doubt about it.
I think I had somebody ask me about Ford, and this thing is pulling. Look at how this thing is pulling. Maybe I'll put this on a weekly basis.
Okay.
And look at this baby pulling all the way back. Let me see here real quick.
Oh, yeah. That has further to go.
This is a big A to B leg.
That has further to go, man.
I was looking at it going, wait.
You're in Ford, folks.
We can get Ford at $4.
You will get $4. Steve Rhodes, Tom O'Brien. Stay right there, folks. We're going up Newton, Massachusetts. Basil Chapman, Larry Pesavento out in beautiful Arizona. Back here with David and myself. Have a great one, folks. Have a safe one.
Take care, folks.